The easy money has been made. This is a statement that the news loves to write about. But when you take a look at this picture, you can't help but laugh. So they love to write this strong title, and the reason for this is that they can easily scare investors with it. And they want to scare you because this is how they make money. The media makes money by selling attention. They sell your attention to advertisers. They want your attention. And they figured out that the easiest way to get your attention is that if they write about scary things. Just go through any news portal and read the titles and you will see what I'm talking about. I think that reading the news is a complete waste of time, especially stock market news. Just remember that they are not financial advisors, they are journalists. And even if you see an expert in the news, there's a reason for that. And the reason is always the same. They want your attention. Many times those articles are sent by a company with the purpose of promotion. So always keep in mind that these news portals have no intention to educate or inform you. Their only purpose is to get your attention so they can sell it to advertisers. Now it's true that the stock market is overvalued today. Most of the stocks are expensive. And if a stock looks cheap today, there's probably a reason for it. And the reason is not that nobody has noticed that stock. One of the things I was looking at today is the dividend yield of the S&P 500. The dividend yield is one of the ways we can get a clue about the valuation of a stock. A low dividend yield means that investors like that stock, so the stock is probably overvalued. And a high dividend yield means that investors stay away from that stock for some reason, so the stock price is low relative to the dividend. So here's the dividend yield of the S&P 500 for the past 10 years. Well, right now it's 1.4%. It has never been so low in the past 10 years. But keep in mind that this is the average dividend yield of 500 companies, and many companies needed to reuse the dividend because of the pandemic. And this is what we see if we look at the dividend itself. So the dividend yield is low, partly because of the price gain, because many investors pumped their money into stocks, and partly because some companies reduced their dividend in the past year. But of course, overall, the stock market is at an all-time high in terms of valuation too. And if you take a look at the price of the S&P 500, it's almost completely flat for the past 30 days. But this is a package of 500 companies, and not all companies are moving the same direction. First of all, many of the popular stocks were falling in price. For example, Tesla is down more than 12% for the past 30 days. On the other hand, most of the stocks in my portfolio have been going up for the past 30 days. For example, Franklin Resources has gone up more than 11% this month. BlackRock is up almost 7% this month. CVS is up more than 16% this month. Altria is up almost 5% this month. Philip Morris is up almost 3%. T. Rowe Price is up almost 5%. So while many of the stocks were going down and the S&P 500 was completely flat, most of my stocks were going up this month. In fact, if I compared my stock portfolio to the S&P 500, this year my portfolio went up 18%, while the S&P 500 only went up 11%. So yes, if you're buying an S&P 500 ETF, then today is probably not the best time to put a huge amount of money in it, but we invest on a monthly basis, more or less, and we invest for a long time anyway. And sometimes stocks are popular and everyone goes crazy, pumping a lot of money in them, and sometimes people are afraid to invest in stocks and they are cheap. But this is how the market works. It's never a smooth ride. We will always experience these fluctuations. But companies generate money and they are always growing over the long term. So I don't think that the easy money has been already made, but I also don't think that this is the time to put all our money into stocks.